Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton. Thank you very much for joining me. Yesterday, the Australian dollar slipped to an intraday low of 67.16, with this morning's low now 67.05, before a slight mild course correction emerged after China unexpectedly said it was willing to resolve the trade war with a calm attitude and hinted it won't retaliate for now. China Minister of Commerce spokesman said, "We firmly reject an escalation of a trade war and are willing to negotiate and collaborate in order to solve this problem with a calm attitude." Elsewhere, though, President Trump said the US and China are set to have talks today, on Thursday in New York, that is, at a different level. Trump didn't elaborate what a different level meant. That is, let's see what the end product is. That's what you'll have to judge it by, Trump said. Though, from the unexpected statement, the Aussie dollar climbed to a high of 67.52 as an intraday high before turning around. It is assessed from the break of 67.40 that the market will continue this bear trend, and nearly marrying up between the two indicators gives an immediate target of 66.85, and with the objective still holding to 66.20.45, or even back to the lows seen in July, around 66.77. As you can see, the euro dollar is still pretty much holding to a bear case as it looks towards the level of 110.20.45 and pretty much is contesting that level now. Overnight, ECB said that there was no need to resume a quantitative easing program, and the ECB September meeting actions are overdone. There was a slight knee-jerk reaction, but the market still maintains its bearish case, with the resistance seen from this downtrend at 111.30.50 could see further risk to the downside. Now, a break beneath 110 gives me a target of 106 to 109. So, with the uncertainty coming out of China that wants to see the trade wars cooling off a little between the two sides, the fact is that the market is a little bit on the cooler side also when it comes to demand, as yen's strength is somewhat depleted. And the market now looking back towards 106.80.90 does suggest a rejection like previously, but we're still locked in this 104.5 to 106.80 range. So let's see how the market plays out. From a technical point, it's not overly strong. The downtrend holds for sterling. Since the 4 rejections, at least from 122.90, the market is now focused back to the 121.40.60 level. A break beneath there would give further scope to the downside and bring in a target of 120.75 and possibly negate this pattern that's holding at the moment. That does give me further scope to the upside, but let's see how the market plays in the next 24 hours. So, like with yen strength, gold weakened overnight, but it did reach its target of 1,550 after posting a high there. It is assessed, though, that demand should emerge from 1,514. If not, then we could be looking back towards 1,496. So keep your stop losses accordingly, because you would most probably find there is stop losses building underneath 14. Wrapping up with oil, well, the market surged further since the break of this pattern and now looks towards an objective that still holds to $58 a barrel. I do believe the market can progress further from the given pattern to about 60 to 62. But first of all, let's see how we play. As long as we don't break beneath this support line, which is roughly around $54.80, then I'm happy to say that the market is still bullish. And let's see how it plays out. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to this new weekend.